Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago on July 9th, bringing you some commentary here in the energy market. So, pretty exciting day here so far. August crude oil trading down around 102.40, really coming under some pressure. It's off about $1. We got Brent off as well, around 108.46. It's off about 48 cents. Take a look at that Brent WTI spread, really slipping here, really coming in quite a bit. I think there could be a little bit more room there to be had, but give me a call if you want to learn how to play that spread. A lot of opportunities there. Nat gas bucking the trend here just a touch. We're up about 2 cents. Heat's off right now, about half a cent. We got RBOB down almost 3 cents, so much weaker tone. Now, I want to draw some attention here to the EIA report that just came out a little while ago this morning. We did see a draw on the stockpiles. Now, coming into the report, looking at it Monday, Tuesday, expectations were a bit mixed. A lot of traders were looking for a draw. Coming in this morning, we did see a draw of about, or the expectation was for a draw of about 2.25 million barrels, and that came in at around 2.37. So basically right in line with expectations. That leaves our total stockpiles right now at around 382.5 million barrels. And, this is something I've talked about in so many of these posts. I've talked about it in our eView, and for those of you that have taken the opportunity to call me, I've kind of reiterated the same thing, and that is when you look at our total stockpiles, I really feel that we've got an adequate supply of crude oil. Now, the highest amount of crude oil that we've seen for this time of year, we'd have to go all the way back to 1990. And we saw levels of our stocks at around 384.9 million. And as I just stated here, our current stocks are around 382.5. So as you see, we're running right about near our record highs amount of crude oil. Take a look at where crude prices were back in 1990, nowhere near these levels. Now, obviously, a lot's changed since then with the weaker dollar and such, but nonetheless, I think we've got plenty of oil out there, in my opinion. So I think that's part of the reason why we're seeing crude prices come under pressure. Also, take a look at the news right now. Yes, there's a lot of problems in Iraq, but that's kind of gone a little bit to the back burner. Libya, the government there has claimed that they've got control of the situation, and they're looking at basically keeping output out of their main oil fields there on track. As I stated before here, when OPEC had their meeting back several weeks ago, OPEC, they came out, Saudi Arabia was the big voice there. They came out and they said, hey, look, any supply disruptions that we should potentially see, be it in Libya or Iraq, they're prepared to step in and keep the levels running about the same. So, we've really had very little to no supply disruptions over there in the Middle East. Yes, there is the potential for some, and that's where we saw the fear premium being built in, and now I think you've got some of that fear premium obviously starting to come out of the market a little bit, and has been here for a little bit. Also, I think it's important to note that, EIA, their short-term energy outlook right now, they've kind of trimmed the demand outlook for oil by about 180,000 barrels a day. I think that's very important. That's something I've talked about before. Is the demand really there? They've also talked about they think that the overall global recovery isn't as strong as what they thought it was. Surprise, surprise. I mean, you look at things here in the U.S., I don't think it's that great. And you look at things in Europe, it was just about a month ago where they announced basically another stimulus package there. So if things are so great, why would they be putting together more stimulus packages? Because they're not. So, again, you got to look at commodities, and we look at it here from supply and demand picture. And I think that's what you've got in oil right now. I believe that you've got plenty of supply, and I don't think that the demand is as strong as what traders were anticipating, hence the reason why we've gotten prices here to pull back. Now, yes, the bears are in control, I think, but, for a while there, we have seen the bulls in control. The market's kind of pulling back. The technicals, the market is starting to get down into slightly oversold conditions right now, but it doesn't necessarily mean that the market has to bounce from these levels. We are touching down right now. We actually went through today. August oil went through the 50-day moving average, which was coming in here at around 102.60. And so we've already kind of traded through there. The market could potentially get hung up in this area. That coupled with the short-term technical indicators a bit on the, the oversold. So we could maybe see a little bit of a bounce. But, we've seen on the chart patterns here, lower highs, lower lows. As I've stated before in some of these prior posts and also in our eView that I write for, when you looked at the record amount of longs that this market was carrying here, once this thing started to lose a little bit of momentum here, and I kind of see that now. You start to get that long liquidation coming into play, and I think that's what traders are up against right now. So nonetheless, there is a lot of opportunity out there for both the bulls and the bears. I think the bears have control of the market right now, but there is opportunity on both sides. And I got to tell you, if you're interested, you want to hear about some of my ideas and strategies, give me a call, shoot me an email. One of the ways that you can go ahead and kind of test drive some of my ideas and strategies is through our online trading platform, RJO Futures Pro. We can set you up with a $100,000 demo account. You can trade in real time charts and quotes, and actually test drive some of my ideas in the market without risking a dime of your capital. I encourage you to give me a call. Take advantage of it.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.